Hello and welcome to another MCO market update on Bitcoin. Yeah, the Bitcoin chart has pushed a little bit higher. That is pretty much still in line with our structures we've been discussing over recent weeks here on the daily time frame. We will talk in this video about the short-term bullish and short-term bearish scenarios on the smaller time frame. But here on the daily chart, they are both still moving together. These microstructures and the move to the upside has now entered the resistance area. I shared like weeks ago, months ago actually already on, in these videos here and on X, for example. And I remember one of the recent posts on X was about the expectation that Bitcoin would rally into the resistance area, 94k plus. It didn't manage to do that in March, but needed a marginally lower low to reach the Fibonacci level. And this is quite interesting because here in March, the price kind of ended in the middle of nowhere and then formed a marginally lower low to reach the 50% retracement exactly here, yeah. And then, has started that journey higher now in this B wave. And, not saying this is a B wave, right? The white count is actually the one that is preferred. If you followed previous updates, then you know that. So the idea is that in a fifth wave to the upside, we should get an ABC structure. So, and the reason is that when we look at the structure from the August low last year, we are tracking 3 waves up, and each of the subwaves is a 3-wave move as well. So a fifth wave is basically still outstanding, still missing, and that fifth wave should be an ABC structure as well. And we're likely tracking here the, I don't want to say late stages necessarily, but mid to late stages of the A wave at the moment. And as long as pullbacks remain corrective, we are going to watch for higher prices. Here on the daily chart, I don't think there is much to do other than maybe adjusting stop losses. So if you are one of those, I know members bought in the box, or many of the viewers did buy in the box. I mean, you can do that if it works for you. I would never tell you to buy or not. I mean, I can't. I don't know you, and this is not financial advice, right? But what we can do, we can explain structure, and the boxes are typically the areas where, from an Elliott Wave point of view, it can be reasonable to add positions. Yeah, that's why the boxes are on the chart, of course, and especially on the daily chart, they often represent stable elements. And I will leave the support area on the chart just because we haven't broken out to the upside yet, not above the January high. So technically speaking, this box could be tested again. It would still be relevant. I would still watch it. But ideally, we don't test the box anymore, or at least we do not get a lower low below the April low. What I want to highlight is, though, if you entered somewhere in the box, then it can make sense to maybe adjust your stop loss, depending on your approach, to at least take the risk out. Because if you use the pyramid approach that I often suggest, it's just, something that Elliott Wave traders often do, is just accumulating in these boxes with a pyramid approach. So that means that you start somewhere up there with a small position, that's the top of the pyramid, and you go a little larger as we go lower, you go a little larger as we go lower, you go a little larger, and here the 50% retracement might have been another larger position, and then it never got down there, which is fine. So you need to find a way to scale up your trade if you want to on the way up, but you already have a position, and then you can just adjust your stop loss to break even, move it into profit. You have to decide that what works for you, but it already takes the risk out. It eliminates the risk already. And now that we're getting quite stretched to the upside here, we have to adjust micro support regions on the smaller time frames together with the price as we climb higher. So we have now reached that 94,249 level. That's a golden ratio level. It's the first real resistance for the red B wave. And, in recent weeks, I don't want to say it was easy, but the situation was fairly clear. We were watching for a low to form and for the price to rally in either red wave B, which is part of the bearish case, or the white A wave into the resistance area. I mean, mission accomplished, I would say. Now it's getting tricky again, because this is the area where these two scenarios will probably diverge from each other. Until now, both were expected to move together, either in a corrective rally in wave B or in an A wave in the white scenario. I would still expect a little higher, okay? before even the red B wave is complete. But overall, we now need to be very watchful that any pullbacks that are not corrective could be part of the red scenario. Which means if any move down is not a clear 3-wave move, it might represent the beginning of a bear market. So I'm not, again, I mentioned it yesterday quite clearly, the white scenario remains preferred. It's been the preferred count, but it didn't matter down here so much because red and white were expected to move together. Okay, that was the great situation down here. That was the beauty of this setup, because a counter trend move was likely anyway, in the right count or in the white count, ideally that A wave. Okay, but now it's getting tricky because the next larger pullback could tell us the difference. So if it's a white count, it should be a higher low, which I would expect. But again, can be wrong about that. Or the red count will take us to new lows. So that's why it's so important to protect your positions if you entered in the box. But how you do that obviously depends on you. I can only explain structure. But the next resistance here on the larger time frame has now been reached, 94,249. Any rally higher could send us to 100,519. Only talking about daily fib levels here. On the smaller time frame, you see the shorter time frame ones. So looking at the shorter time frame here, not really much to add, but what I have done throughout yesterday, like a trailing stop, we've just simply adjusted micro support. So the trend is up. That's what we do when we are moving up in a third wave, especially a third and a third wave. Movements can be stretched. I always try to teach that. The third wave is typically the longest one. Honestly, nobody should be surprised if a third wave extends. If we know we're in third wave, just expect extensions. And but anybody who's been watching these videos should know that. So third waves can easily extend. They're actually expected to extend. But because you cannot, let's say you cannot predict the exact extension level, all we do is we have a support area for wave 4 for any pullback, which is the upside continuation support. And we just simply adjust it with the price. So if the price still pushes higher, which is here the third wave, and it still goes higher, then all we need to do is to adjust the support area with the price. Now, why is that helpful? Because, well, it keeps you out of the noise, and it also gives you the risk management levels along the journey here. So the idea is that there is a support area, and it acts as risk management area. So a break below it, in this case 89,407, would suggest that the larger degree fourth wave has started. Honestly, I don't even want it to break below 90,351 in this microstructure. I'd say any break below 90,351 would be a first signal that wave 4 has started, the larger degree wave 4. So that being said, the immediate move up that started here on Sunday is so far only a 3-wave move up. And I am watching for 5 waves to the upside, however. Okay, I'm watching for 5 waves to the upside to form. That means I would like to see another 4-5 pattern. That being said, because this third wave is so extended, it might not give us that additional 4-5 pattern. It might do it in one go. But still, until support breaks, I would watch for one more high. So one more higher low, one more higher high. So overall, focus is still on higher. Question might be, what are the next upside Fibonacci levels? I can remove the ones that were already broken to the upside, so we don't need them. The question is always, what are the next upside levels to watch? We've now reached a bit of a cluster of resistance here, or of upside targets. The next one is 95,444 and 97,585. That's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.